CMBS is really tailored to more stabilized assets. And we were really rocking it on the operational side for sure when we stabilized it really, really quickly.
It's all about the business plan. It's not just about what is this doing now. It's what can we do with it.
I always tell investors, I don't want this to be a one and done kind of thing. I want us to grow as a partnership together. Welcome, guys, and thank you for joining us today. So as some of you may know, we are currently working on refinancing our Oklahoma City mobile home park. And it's awesome because we're refinancing under 2 years of the purchase date, which is pretty fast. And the plan is to return investor capital and keep it in cash flow, right? That is the plan. Everybody's really happy with this deal. It is my personal favorite, if you ask me. So we are using commercial mortgage-backed securities, CMBS financing, right? And it is the first time that we are using this financing. And for today's webinar, we wanted to take a minute to share what we are learning, right? Because there's always lessons to be learned. And for those of you that have invested with us or are following our journey, you know that we are big believers in sharing both the wins and our lessons learned. And we're huge on transparency, right? Which is why we want to use this webinar space to talk about that, right? Like I said, today we're going to share what we are learning with the CMBS process. And as always, I'm joined here with my business partners, Tim and Matthias. How are you guys doing today?
Doing good. Thanks, Vinny.
All right, Tim. So let's start with the basics, right? What is CMBS financing?
Yeah, so it's just, a different kind of loan. Everything we do, we get a loan on the property, just a general mortgage. And there's different lenders who lend specifically to mobile home parks. And the history of this one, so we bought it a little less than 2 years ago and had the financing with Five Star, which is a great bank. And when we were looking at how we're doing today compared to how we were doing back then, the NOI has jumped through the roof. And so we got on a call with the guys in Five Star asking about a refi, and they said, it's doing great, but giving cash out on the refi is not their primary thing. He said, it's based on conservative cap rate in the area for the style or the type of asset this is probably, the value of things. And he said, we recognize that there's a lot of potential there, but we're not the best lender for that refi. And so we talked with Judah from Princeton and said, hey, this is where we're at right now. What do you think? And, the benefits of working with loan brokers is they're always they know the game. They know what would be best to go after. And so in that first call, I said, oh yeah, I think it would qualify for CMBS, which is, a step higher in terms of lending. Higher might be the wrong way to put it, but it's just a different kind of lender. And so he came back and he said, yeah, this, we talked to these CMBS lenders. And again, so a CMBS lender, they require a more stabilized asset and a nicer asset to the best of my knowledge. And so, yeah, we had done a lot of work with Sherwood Forest. And so he came back and said, oh, these are the 3 CMBS lenders that are willing to do it. I recommend going with this specific bank. And that's been our story up until now. And we're excited to work with this lender because it's a new route to go. And also, they're going to give us a lot of proceeds. So like you said, we're able to give all of our investors their original capital back, keep everyone in the deal with the same equity, and just all cash flow together. We can just continue to hold it and everyone gets, I think we talked about going from quarterly to monthly distributions on this one too. So it's just that no one has anything in the deal, and everyone's getting a monthly ACH in their bank account. You can't go wrong with that.
And that's the dream, right? I think in the beginning, the business plan for this park was to do that after 5 years. It was a 5-year business plan, but to be able to do that under 2 years, return investor capital and just cash flow and keep it because it's such a good deal that that's the dream. And we're happy that we were able to do that for our investors. So Matthias, Tim alluded to this a little bit, but we're talking about the Oklahoma City deal, Sherwood Forest. Why is CMBS financing a good match for this particular park?
Yeah, CMBS is really tailored to more stabilized assets. And we were really rocking it on the operational side for Sherwood. We stabilized it really, really quickly. We had under-market rents, we had a deteriorated bridge, infrastructure issues, you name it, bad tenants. When we took over, some of the people that were delinquent, they were over a year behind, if you guys remember. Some of them were like, I think 16, 18 months behind. It was incredible. And we cleaned house, and now people are very much current, and we placed new people. We actually gained a lot, right? We had 75 lots when we bought it. We have 76 now. We have a storage shed now we're renting out, etc. So what that means is it's very stabilized. If you look at our income, it's like fluctuating a couple $100 every month, depending on when people pay, because we do cash-based accounting, and some people might pay like a day early or so before the first of the month arrives. So it's very stabilized. It's what CMBS wants. So with CMBS, they usually take a bunch of these loans and pull them together and then sell them to institutional buyers, basically. So kind of diversify, but they want to make sure they have very stable assets in those pools. So what they do with that is then, since it's safer in a sense and safer assets, it's higher leverage. You can get some really good 70, 75% LTV, which is pretty good. And then it's more longer term debt, 5 to 10 years on CMBS. What is really nice is a non-recourse structure. And maybe many of our investors probably don't know that, but we as GPs, we always sign on these loans with personal guarantees when we get started, because most of the deals, all of them that we did, were not qualified for CMBS right away. This might change in the future as we buy bigger assets that might be more stabilized. But a lot of things where we had infrastructure issues, like with Sherwood, and like high delinquency, CMBS doesn't touch that. So we have to go with local banks or national banks, for example. And they usually want you to sign a personal guarantee, which means we're betting our house on it. If something goes south, we can make a debt service. They would come after our personal assets. I'm talking about skin in the game, right? When we CMBS, there's no recourse. So besides like bad boy carve outs, if you do anything like deliberately wrong, of course there's some bad boy carve outs there. But I think that's a big difference there. And I think I got most of them covered. And we talk about the negatives or like the downsides of those down the road. But the CMBS, you want to plug into an asset that you're going to hold longer term, because like refining is more hard once you have a CMBS loan on it. And once you have it, stabilized, and you put a CMBS loan on it, you kind of not stuck with that, but you want to stick with it. So it's really tailored for like really stabilized assets.
Thank you for that, Matthias.
Can I interject real quick? So it's, as Matthias was talking, I was thinking about personal guarantees and how, like, as we've gone, like, there have been people decently ahead of us who are like, oh, don't do that. Don't sign personal guarantees. That's crazy. That's way too much risk and blah, 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 blah. But like the reality is when we started, and likely when most people start, you have to sign a personal guarantee. I mean, if you don't believe in the deal enough to do that, that says something, Talking about personal guarantees and how it was a requirement, and we believed in the deal. We put up everything, So anytime people are like, oh, what skin in the game do you have? It's like, well, okay, besides the money that the GP invests, 5 to 10% of every deal, we also sign a personal guarantee on things. So sure, like we could lose the 5 to 10%, but what's even more skin in the game in my mind is, if a deal goes under, if we foreclose on something with a personal guarantee, like that comes back way more than just the one deal. So anyway, I know I'm going a little off topic on personal guarantees, but it's the reality when you get started. And, sure, we're 6 years or whatever into doing this and doing our first loan without a personal guarantee, but that's just the reality of how things are. But yeah, I'm off my soapbox now.
No, that is a good soapbox, because like Matthias said, right, talk about skin in the game. And you have to believe in the deal. It has to be a good deal. Otherwise, it could be a red flag, right? So CMBS, back on track. Tim, Let's talk about some CMBS lessons learned. What has surprised us the most during this process?
How much stupid paperwork has to be done? That's what surprises me the most. Man, it's so much. It is so much. We've closed a lot of things and it's a refi, so it's just closing another loan, right? But yeah, the big surprise is, oh my gosh, it's so nitpicky. And I get it. I mean, okay. So if you think about what a CMBS loan is, it's commercial mortgage-backed security. They're packaging this up and they're selling it on another market, right? So they have to make sure that everything is laid out, all the T's are crossed, the I's are dotted, all that good stuff, so they can sell this on that secondary market. So I get it. I 100% understand, but oh my gosh, it is so much. I am so excited to close this and just like get back to, the great business as usual that we're doing with this park. But yeah, I think that's the most surprising. That, and it's taken a little bit longer to close. I'm hoping that because it's our first loan with these guys, that's how it is, and the next one will be, less complicated. With that being said, if it's not less complicated, at least I'm prepared now.
Sure. So, Matthias, despite the extra work, there are clearly some benefits, right? Some significant benefits of CMBS. What stands out to you?
The lower rate. I mean, the lower rates will help a lot. Obviously, the longer term is a big one too. You don't get a reset after a few years, which helps a lot because there's a lot of uncertainty in the market, right? That one's actually the biggest for me because you have certainty for longer periods of time for your debt being more fixed, if that makes sense. And if you see a lot of operators and syndicators right now from the last couple of years, that bought before 2022, before the rates went up, and they're in that 3 to 5 year cycle right now, and they're all getting caught while the tide goes out. Nobody saw that coming, that the rates go up that fast. It never happened that fast in history. So it's good to have debt that's more longer term. It's not 30 years like a residential, but this is how the commercial game is played. I mean, the CMBS, you have a longer term, which is really nice. So, and the non-recourse thing, we talked about this a couple times now on this webinar, but that's a big one because you get that target off your back, as personal guarantor, because you don't bet in the house on it anymore. And it's a stable asset. It's why they're doing it in the first place, because it's now a really, really safe deal. And there's some really strong DSCR requirements. I mean, they're requiring a 1.3 DSCR. They're not going to just lend on this if it's not stabilized and making not good money. So as Tim mentioned, they're pulling all this together with other commercial loans and selling it on the secondary market. So they want to make sure it's a solid asset. And, the bank is our biggest investor. And in this case, this is the same thing, right? So if you get a CMBS loan on a deal like this, that was somewhat distressed, 2 years ago or less than 2 years ago, that shows how well we operate this asset and how quickly and efficiently we stabilize this. So that means a lot because this did not even close to qualify for CMBS less than 2 years ago, but now it fully does. And if you guys remember, we had that call on Wednesday with the bank and they said, this is a really clean asset and there's not really much going on. We should really pat ourselves on the back. They literally said that. And considering how strict these guys are, this is a huge compliment. I just want to highlight that again. Like, we did such a great job with this asset, and it's one of my favorites as well. Like Vinny said, it's his favorite. So for me also, it's a really nice, like poster child of, how things can be done and should be done in this asset class.
Yeah, and just so you guys know, that's the benchmark, right? That is what we strive for when we look for deals and we try to stabilize them, right? That is what we look for, something that we can potentially refinance ASAP, right? And return invested capital as soon as possible, and then cash flow and keep it, right? That is what we strive for. And yes, that is what this Oklahoma deal is doing for us and our investors. All right. So every financing option has trade-offs, right? We talked about the good things of this financial option. But Tim, what are some drawbacks?
Okay, and I'm going off script a lot right now, and I love it because that's just what I do sometimes. So I was thinking back to when we closed this 2 years ago, and I was like, man, we're overpaying for this. This isn't a good deal. And, we had for anyone who doesn't know, we had it under contract for $2.2 million. And then last minute, we had to put in an extra $200,000. So we ended up buying it for $2.4 million. And I was, being the acquisitions guy, I was like, man, this sucks. Like, what are we doing? We're overpaying for this. I don't see it right now. I can't believe it. And, I'm looking at the initial appraisal that we got. The initial appraisal was $2.24 million. So we had to put in extra cash. We couldn't get a loan for that full, whatever, 2.4 or the 70% of the 2.4. So yeah, there's a lot of doubt back then from my end about, whether this is a viable deal or whatnot. But, we just got that another refi appraisal back at $4.6 million. So I think I bring this up to really help anyone who's relatively new. All the time I get people saying, is this a good deal? I'm like, I don't know. Like, it depends on what your metrics are. And for us, we make things into good deals. So like sometimes it's not the best deal at purchase, but there's clear path to improve things a lot. So like, you look at the Whispering Pines deal and people were like, oh, you bought that. The cap rate is so awful on that. And I'm like, yes. And it's an owner finance deal at 5% for 5 years, interest only. Like, it's all about the business plan. It's not just about what is this doing now. It's what can we do with it? And, we did a lot. We raised the value from 2.24 to 4.6 in less than 2 years. So yeah, that's me thinking about like all the little things that can be done to improve something rather than just, am I buying this at a good deal right now? So there's a lot to commercial real estate that with some work, you can really increase value of things. Anyway, you asked about what are the negatives of working with KeyBank or of working with a CMBS lender. So the big negatives is there's no prepayment penalty sort of thing in CMBS, but it seems most of them that we've researched, they do something called defeasance instead, which makes it very, very difficult, it seems, to try to pay off something early. So like if we only wanted to hold this for another 3 years, then doing the CMBS loan wouldn't make sense. If, we wanted to own it less than the 5-year term, it wouldn't make sense. And yeah, it's not for everything, but that's again, though, why having a good loan broker helps, because they help kind of guide you. Same with good attorneys, good CPAs, good loan brokers. They're all like your partners. How can we do this in the best way? And, a lot of people say that commercial real estate is a team sport and that is very collaborative. And the more we do this, the more it's apparent that, sure, we could do things without some of the help, but like we wouldn't be doing them as effectively. So it's that reminder to, okay, let's use the right person for the right job.
For sure. Yeah, it all comes together when you have the right pieces, right? So, Matthias, for the investors listening today, what should they take away from this discussion?
There's so many tools to get a deal done. And then once the deal is done, meaning the business plan is done, doesn't mean it's the end. We keep this for long-term cash flow because it serves our investors. We don't want to spill the beans just yet, but everybody gets their money back and they already receive preferred returns for nearly 2 years. They're going to then just get basically a profit split, which will be infinite returns because all the initial capital is returned. So the investors will learn that putting a CMBS loan on this is hard, but the hard road becomes easy because things are getting easier after the fact once you're done with the business plan. And then from there, it's just basically cash flow for everybody. And if something qualifies for CMBS, that really means that the asset is really performing really well. I think that's also a good takeaway. Because the bank, they're risk adverse. They don't want to put any of their money or pool this with other investments if it's a risky asset. So if something qualifies CMBS, there's a very good chance that it's a very nice stabilized asset. So I think I would bring this in front of our investors and keep that in mind. If you ever see a deal we do in the future and we have a CMBS loan on it, that means that thing is already a rock star out of the gate.
Well said. Tim, any last minute comments? something you want to share that you hold it in your chest and you have to let it out.
Yeah. I just want to say again that we're refining, we're returning all investor capital, and we're keeping everyone with the same equity position in the deal. A lot of guys will refi, return capital, and go down to like a 50-50 split. Or they'll refi, return capital, and get people completely out of the deal. Like, oh, we gave you the 7% pref, 8%, 9, 10, whatever that we said, plus your initial capital, and now you're all out. And now we as a GP get all the upside. Ha 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 ha. That's not what we do. We make sure that people stay with that same position in equity because we want to win with our investors. You know, we want to continue to cash flow. And I've said it 100 times and I'll keep saying it. My goal is to do such a good job for our investors that they just keep putting money back into deals, keep investing with us. We keep growing together. And that's it, you know, that's how we win. And so we as a team are very cognizant of how can we treat our investors even better? How can we make this a no-brainer deal? And I mean, that's how we have calls with people who have invested with us in various deals and how, you know, they put in a little bit initially and how they're putting in a lot of bit now. And, you know, it's so powerful. And so, yeah, we're very cognizant of we don't need 100% of any deal. We need a little bit of a lot of deals. And we're going to keep doing it like that and keep treating people well. And yeah, it shows up in terms of repeat investors. And I'm super proud of what we're doing.
And so leading the investor relations wing of the company to see investors coming back and reinvesting with us. And not just one, but multiple, right? And now the check amounts are larger. They're really happy with our service, and that's really rewarding to see. And we want to continue that, right? And we want to get better. And to your point, we want to win together, right? I always tell investors, I don't want this to be a one and done kind of thing. I want us to grow as a partnership together, right? So yeah, well said. Matthias, any last minute comments before we close out?
I'm excited for the CMBS loan, although it's a little bit painful to go through the process, but I think on the other end, it's going to be so worth it, and I'm looking forward to the next one. Can't wait until we have our first agency loan, which will be even worse, I heard, and that's even better loan terms and better rates, but we definitely will do a webinar about that one once we do an agency loan. But that just means we're leveling up. I think that's why I'm excited about this. Like, first CMBS loan for WCG means we're leveling up from like the national regional banks, and then we do CMBS, and the next level will be agency, which I'm sure within the next year or so, we're probably going to have something with agency at some point. So I'm excited about this leveling up and this growth we have. It's super exciting, and I always have to remind myself to look a little bit on my shoulder and see how big of a mountain we climbed, and super proud of the team that we achieved this much in so little time and made our investors so much money, and also improved the communities for our residents, right? I mean, for this park, people were trapped in the park when there was any flooding around that bridge, and there was a severe safety issue because there was no way out of the park if that bridge was flooded, right? And we fixed that like within the first months, replacing an entire bridge. So there's so much to look back on for Sherwood, where everybody won, from the tenants all the way to the investors. I'm super proud of it. I can't wait to see what we do the next 12 months.
Absolutely. Thank you, Matthias. All right, guys, so there you have it. That is what we have learned so far from our first CMBS refinance. So as you know, one of our goals, if not the main goal, is as a company is transparency. We believe that investors benefit when they understand not only what we're doing, but why we are doing it. Right. So if you would like to learn more about any investment opportunities or mobile home park investing as a whole, we'd love to connect. You know, feel free to reach out to us directly. We'll have our contact info down low. Check out the website and make sure you sign up for our investor list so you can be updated as we move forward, and so you can be connected to the things that we're working on. So with that, thank you for your time, and we'll see you on the next webinar. Have a great one.
Thanks, guys.